Have you ever wanted to invest in a way that generates passive income without constantly monitoring the stock market or managing real estate? What if you could become the bank and start earning money by lending to others? Well, that's exactly what peer-to-peer lending, P2P lending, offers. Before we get started, please help us out with a like and subscribe to our channel for more of the best passive income content. In today's video, we'll show you how to use peer-to-peer lending as a passive income strategy. We'll break down how peer-to-peer lending works, the platforms that allow you to start lending, and how to minimize risk while maximizing returns. So, if you're looking for a unique way to grow your wealth with minimal effort, you're in the right place. Let's dive in. What is peer-to-peer lending? Let's start with the basics. Peer-to-peer lending is a form of crowdfunding where individuals lend money to borrowers via online platforms, bypassing traditional financial institutions like banks. In a typical loan scenario, a bank or credit union serves as the intermediary between a borrower and a lender. But with peer-to-peer lending, individuals can directly connect with each other, cutting out the middleman and offering benefits to both parties. As a lender, you can earn interest on the money you lend, just like the bank would. But unlike a traditional bank, P2P lending platforms allow you to choose the loans you want to fund, set your terms, and even pick the borrowers. The borrowers, on the other hand, often turn to P2P lending platforms because they can get loans with lower interest rates compared to traditional bank loans. The beauty of this system is that it allows you to start earning passive income with relatively low entry barriers. And the best part? You don't need to be a financial expert to get started. Let's go through the details of how this works, so you can start building your own stream of passive income today. How does peer-to-peer lending work? In its simplest form, peer-to-peer lending is just like any other loan process, but it's conducted through an online platform instead of a bank. Here's how it works, step by step. The platform. The process starts with a P2P lending platform. Think of this as the marketplace where borrowers and lenders come together. Popular platforms include Lending Club, Prosper, and Funding Circle. These platforms serve as the intermediaries, providing the infrastructure to make the lending process smooth and secure for both parties. Borrower application. Borrowers create accounts on these platforms and apply for loans. They provide financial information, such as income, credit score, and the purpose of the loan. The P2P platform evaluates the borrower's creditworthiness based on these details. Depending on the borrower's financial health, they're assigned a risk grade. Loan listings. Once the borrower is approved, their loan is listed on the platform for potential investors, lenders to review. Each loan comes with details such as the interest rate, loan term, and the borrower's risk profile. As a lender, you can review these details and decide whether to invest in the loan. Lending the money. You, as a lender, select the loans you wish to fund. You can choose to fund the entire loan or just a portion of it. The platform aggregates smaller loans from multiple lenders to fund the full amount that the borrower has requested. Repayment and interest. Once the loan is funded and the borrower receives the funds, they begin repaying the loan, typically on a monthly basis. The borrower makes payments that consist of both principal and interest. As a lender, you receive your share of these repayments, which will include interest payments as well. Earnings. Over time, you earn interest on the money you've lent. This can be a steady source of passive income, especially if you diversify across multiple loans. The platform will often handle the administrative aspects of the loan, including collecting payments and distributing funds to you. This makes it easy for you to receive consistent payments without any heavy lifting on your end. Benefits of peer-to-peer lending for passive income. There are several reasons why P2P lending is an appealing way to generate passive income. Here are the top benefits. Number 1. High returns. One of the main attractions of peer-to-peer lending is the potential for high returns. Compared to traditional savings accounts, certificates of deposit, CDs, or even bonds, P2P lending offers significantly higher interest rates, often in the range of 5–10% or even more depending on the risk of the loan. If you're used to the meager interest rates offered by banks, P2P lending can feel like a breath of fresh air. The interest you earn on your loans can provide a steady stream of income that beats inflation and outperforms traditional investment vehicles. Number 2. Diversification. Peer-to-peer lending allows you to diversify your investments. By lending money to different borrowers with varying credit profiles and across multiple industries, you spread out your risk. You don't have to rely on one type of loan or one borrower for your returns. Diversifying your investments is a key strategy to minimize risk while maximizing the potential for returns. Number 3. Minimal effort and time. Once you've set up your account and selected your loans, the rest of the process is automatic. Peer-to-peer lending platforms handle everything from collecting payments to distributing your earnings. With minimal time commitment, you can start earning passive income without much effort on your part. This makes it an ideal option for those looking to earn money on the side or build wealth with limited involvement. Number 4. Low startup costs. Getting started with P2P lending doesn't require a massive upfront investment. Many platforms allow you to start with as little as $25 to $100 per loan. This makes P2P lending accessible to a wide range of people, including those who may not have a large amount of capital to invest. As you grow more comfortable with the platform and understand how the process works, you can increase your investments. Number 5. Flexibility. Unlike traditional investments, P2P lending offers flexibility. You can choose the loans you want to fund, pick your investment amounts, and set your own risk tolerance. If you're looking for a safer investment with lower returns, you can choose borrowers with better credit scores. On the other hand, if you're willing to take more risk for the chance of higher returns, you can opt for loans with higher interest rates and higher risk borrowers. How to start with peer-to-peer lending. Now that we've covered the basics, let's dive into the actual process of getting started with P2P lending. It's simple, and you can begin earning passive income in just a few steps. Step 1. Choose a P2P lending platform. The first thing you need to do is select a P2P lending platform. There are several to choose from, so it's important to do your research and find the platform that best aligns with your investment goals. Some of the most popular platforms include Lending Club, one of the largest and most well-known platforms. Lending Club offers personal loans, small business loans, and auto loans. They have a wide range of options for lenders and investors. Prosper. Prosper offers personal loans and provides an easy-to-use platform for lenders. It's a great option for beginners, with a simple process and low minimum investment requirements. Funding Circle. Funding Circle is ideal for investors interested in small business loans. If you prefer lending to growing businesses, this platform is a great option. Upstart. Upstart uses AI-powered underwriting to assess borrower risk, making it a unique option for lenders who want to invest in personal loans with a more tech-forward approach. Step 2. Create your account. Once you've selected your platform, you'll need to create an account. The registration process is simple and typically involves providing your personal information, investment goals, and banking details for transferring funds. Most platforms will also require you to verify your identity for security purposes, but this is a standard process. Step 3. Fund your account. After setting up your account, you'll need to fund it in order to start lending. Most platforms offer various payment methods, including bank transfers and credit cards. Depending on the platform, you may be able to start investing with as little as $25 per loan. Step 4. Browse and select loans. Once your account is funded, you can start browsing available loans. Each loan will have detailed information, including the borrower's credit score, the loan amount and purpose, the interest rate offered to the borrower, the loan term, typically between 3 to 5 years. Your goal as a lender is to evaluate the risk associated with each loan and decide which ones you want to fund. Higher risk loans tend to have higher interest rates, but they also come with a greater chance of default. Conversely, lower risk loans typically offer lower interest rates but are more likely to be paid back in full. Diversify your portfolio by funding loans across different credit scores and loan purposes. This will help reduce risk while still offering you a good chance of earning consistent returns. Step 5. Monitor your investment. After you've selected the loans you want to fund, the platform will take care of the rest. However, it's still a good idea to monitor your investments periodically. You can check on your returns, track borrower payments, and even make adjustments to your portfolio if needed. Many platforms will send you monthly updates on your portfolio's performance, showing the amount of interest earned, principal paid, and any defaults. Step 6. Reinvest your earnings. To maximize your passive income, consider reinvesting your earnings back into new loans. This allows you to take full advantage of compound interest, growing your income over time. Platforms like Lending Club and Prosper offer auto investment tools, which can help you automatically reinvest your returns into new loans based on your selected criteria, risks, and how to manage them. While P2P lending offers great potential for passive income, it's not without its risks. Here are some of the most common risks associated with P2P lending and how to mitigate them. Number 1. Borrower defaults. The most significant risk in P2P lending is the possibility that the borrower will default on their loan. If this happens, you may not receive the full repayment of your principal or the interest you were promised. To reduce this risk, make sure to diversify your investments. By lending to multiple borrowers across various credit scores and loan types, you spread the risk and reduce the impact of any one borrower defaulting. Number 2. Platform risk. While P2P platforms themselves are generally reliable, there is always a small risk that the platform could face financial difficulties or close down. To mitigate this risk, stick with well-established platforms that have a track record of success. Number 3. Market risk. Like any investment, P2P lending is subject to market conditions. If the economy takes a downturn, the risk of borrower defaults may rise. However, since you're investing in relatively short-term loans, the impact of economic changes can be limited. Number 4. Liquidity risk. Peer-to-peer lending investments are not liquid. This means that if you want to sell your loans or withdraw funds before the loan term ends, it might not be easy to do. Be prepared to keep your money invested for the long term. Conclusion: peer-to-peer lending is one of the most accessible and attractive ways to earn passive income today. With minimal upfront costs and the ability to earn regular interest payments, it's a great option for anyone looking to build wealth with less effort. Remember to diversify your investments, choose a platform that suits your needs, and carefully evaluate each loan to minimize risk. With the right strategy, P2P lending can be a steady and profitable source of passive income. If you found this video helpful, don't forget to like, subscribe, and share with others interested in building wealth through passive income. Start your peer-to-peer lending journey today and begin earning passive income with every loan you fund.